Good morning, everyone. This is Brad Matheny. Today is Thursday, the 14th. Let me close this, which is always up here. And this video is going to try to go over some of the currency moves that are taking place and why we are seeing commodities like oil rally and the Swan collapsing. What is happening is, and I just got done explaining this to some of my members, is that the carry trade in Asia is collapsing. The long term effects of zero interest rate by the Fed, where foreign corporations and governments were able to borrow US dollars at near zero interest rates, convert that money, the US dollars, into localized currencies, and engage in transactions or loan the money out themselves for 8, 10, 12, 11%, is now collapsing. The idea was is I could borrow at 2.5%, loan, 100, $200 million, loan $50 million out to my friend or at 8.5% or 10.5%, and see them go do their business and maybe share in a portion of the profits that they create. And then I could take the other $150 million and I could engage in business myself and maybe make 12, 15, 20% and only have to pay back 2.5% because that's all I had on the loan. So you take a short-term loan, you figure you can roll this 10 or 12% over or 15% plus carry trade over a 24-month, a 36-month period. And then at the end, you're clearing essentially 15 to call it 15 to 20%. And you are now returning back the 200 million that you borrowed at 3%. So it's essentially borrow at 3%, turn that into a 15%, 20% net profit, 20% minus 3%, you net 17% on $200 million. But what happened over the last couple of years is we've had a broad shift after COVID. The US dollar, you can see here, went from post COVID lows, which was easy to borrow, made it nice and simple. Now it's gotten a lot stronger up into 2022, and it's now moving back up again. What's happened now is the strength of the US dollar, which understand this is a fairly big move dollar wise. 25% move in the dollar, okay, is now weakened global currencies to the point that that carry trade becomes a very risky currency move. So once these people are in and they are trapped in this mode for, say, 2 or 3 years, the only option they have is to try to make it work or try to get out of it by paying it off or by going into some form of default. So understand that the downside to this carry trade is the US dollar has rallied, commodities have gone up, cost of materials have gone up, cost of labor has gone up, currency have collapsed compared to the US dollar, and global economies have collapsed where consumers are just not buying what they used to buy. So, what's happened over the last basically 14, 15 months, and if you think about it, guys, maybe a little bit longer, but I'll come over here and try to give you an example. We're right here. And if I go back from July to July, maybe a little bit longer, maybe back into March 2022. So as of this area, so I'm going to try to draw roughly in this area. Let's do it this way. So basically in this area, everything was golden. Okay. You could borrow, everything was good, not so much of a problem, and you could run this carry trade without too much difficulty. This area is where things got a little difficult. And what happened when I say difficult, we're now trying to defend our currency and defend our economy and hope for the best. So, this is an area where things became a lot more difficult for foreign markets. This area here is where we are seeing early stage, and I'll mark this a little red, early stage crisis. Okay. And this area, if we get back up to it, would be major crisis. Okay. This area back up here is major crisis event for foreign currencies. Now, will the US dollar rally this far? I don't know. My opinion is the US dollar will continue to strengthen through the elections all the way into next year, maybe in this 104 to 108 area, putting more pressure on global markets, depending on what the Fed does, because it is now a safe haven. And again, the Japanese yen will become a safe haven, the British pound will become a safe haven, and the euro will also become a safe haven. Gold and silver will also become more and more valuable to global markets as the currency collapse continues for the foreign markets. But I want you to understand that this dichotomy that's taking place throughout this carry trade unwinding is driving a massive wave of capital to invest in the most secure assets in the world, which right now really is the US dollar equities. That would be large cap, mid cap, small caps for the most part, and ETFs. And we are seeing that in the market. You can see here, even with high inflation, even with higher interest rates, which remember, aggravates this carry trade because understand higher interest rates, and this is something you need to understand. So let me just show you with the wand. Okay, so we're going to come in here, USD CNY. Here we go. Weekly chart with the wand. So understand here that the wand has lost from this same lows from the dollar, has lost 16%. So when that carry trade that they were into back over here unwinds and you lose 16% on your localized currency and the dollar goes up 25%, now you're essentially looking at a 33 to 38% variance to convert your local currency back into US dollars to pay your debt, your $200 million debt. But understand that this also puts a lot of pressure on global assets. As long as this unwinding of the Chinese yuan continues to play out, traders are going to be seeking security in the strongest economy, strongest currencies and economies on the planet. So now I took a look here, MYR, USD. This is the Malaysian ringgit. Again, I believe Southeast Asia is experiencing a vast decline in real value. So look at this chart. You can see we've got very strong decline from 0.25 down to 0.23 or 21. Kind of hard to understand where we're at, but let's pick this area here. Actually, let's pick this area here and understand this is another 14% collapse. Okay. This is something that's very big. You must understand that this will create potentially a black swan event. This is a setup for a global crisis, a global currency crisis that will lead to a credit event crisis, that will lead to potentially a broader unwinding of debt events, putting banks and potentially corporations and potentially governments at risk. We are in a scenario where the higher interest rates the Fed charge is going to unwind assets, and we're going to be seeing things like gold start to really accumulate. Okay, now this is gold. You can see how it's been accumulating and of course I got a lot of data on here, but you can see how it's been accumulating very strongly over here, moving down because the US dollar is moving up. But the real reality here is gold is going to make a big move up into 23 to 2500, and then it's going to rally up into the 35 to 3700 area. Silver is the one I like to watch because silver tends to move a bit more aggressively when dollars move. Silver is holding up very well. Look at this. You can see here going back. We've got a lot of data. It's consolidating in a range. This gives you an idea of what I call my phases. Let me come back over here, get rid of this little dot. So this is what's called the setup phase in silver. We just completed this, and I've got a video on my YouTube channel all about it. But we're repeating the 2003 through 2005 setup for gold and silver. We're going through that exact same setup right now with a different set of circumstances. The setup phase has completed. We're now out of the setup phase and getting ready to move into the launch phase, which will move us up into this is called the breakout phase. Okay, so now we move into the breakout phase, and what happens here, we see silver move up approximately 78% up into the 36 to $41 range. Then we're going to consolidate, maybe get some sort of a retracement. I'll draw it real quick. Maybe get some sort of retracement through some moderate credit event, kind of like this, before we get out of this setup phase. But the setup phase then leads us into the expansion phase. Same thing happened in 2003 through 2005. We go through the setup phase, which is an extended basing, comes back after COVID, comes back after these lows. Then we move to the breakout or the breakaway phase, which normally sets up a fairly early consolidation period, might end up seeing some sort of an event like I've highlighted right here. This is the election, the US presidential election. I believe that could create some sort of a credit event or global crisis event. And then we move into the real accumulation phase. And the real accumulation phase can actually increase quite a bit higher. So this is where you need to understand that this is taking place and it actually is driving capital into stronger assets. We may see a 350 to 315% move in silver, which would be about the same, I believe, 360, 370 for gold. That would put gold where we're at right now at just above roughly 7,500. And again, the peaking level. So if you take a look back over here at this peaking level, and you can see the setup. Here's the same setup. There's the setup phase, there's the breakaway phase, there's the expansion phase. We get out of the expansion phase, we go through the crisis event right here, then we see the big rally phase. So how much did it rally from the setup phase? 600%. Silver rallied 600% from the setup. Sorry, that's this one. 864% from the setup phase. If we get an 864% rally, and look, I've got lines way out here in the future. I do this a lot as I kind of see what's going on. But an 864% rally would be, I mean, I don't even want to think about it. It'd probably be $300 silver. $235 silver. So theoretically, if we were to see that same type of expansion, we would get up into this 230, 250 area as the crisis event plays out. And that will more than likely be around 2028, 2029. But we are going to go through these phases. And I want you to understand that what you've got to pay attention to right now, is this, okay? The setup phase, moving into the breakaway phase, moving into the expansion phase, which is right here. This is what you need to be aware of in relation to the credit event that is unwinding globally. The credit event that's unwinding globally is going to drive a lot of money into the US markets. Once the credit event stabilizes to some degree, then you're going to start to see some potential sideways activity into this area, possibly leading to some crisis event between this area, this 2024, 2025 area, and maybe back over here in 2027, 28, 29. But the big crisis event normally takes place after this expansion phase. So watch what happens to currencies, watch what happens to the US dollar, and understand that what is driving the rally in the US markets right now is this carry trade unwinding. Global investors and billions of dollars are seeking safety, and they're finding it in US equities market and the US dollar, which is why we're seeing the markets continue to move higher and higher and higher against the Fed, against inflation, against all logic that says that the market should be contracting at this point. The global markets are driving assets into the US dollar and US equities. When it breaks, when the tide shifts, watch out, guys. It's going to be a big, ugly move to the downside. Okay, hope this helps. Talk to you soon.